Hey guys, it's Juan here with West Crypto Portfolio, and this is your weekly crypto market update. All right, guys, if I sound more excited than usual, there's no reason for it. Or rather, crypto is not the reason for it. But there's a couple things that I want to say in video that I didn't quite get to say on the written issue, which I recommend you read first before you watch these videos. And I may have mentioned them in previous videos, but I really want to drive the points home. There's a couple things that I want to drive home here. Two, one in the future, one in the present. Let's start with the present. I have never seen Bitcoin get this close to a downtrend line. These are called valid trend lines in my model, which is based on Hurst's framework. For those of you who don't know, there's a YouTube video, actually, a bunch of YouTube videos with these lessons for free, by the way, if you want to check them out. Valid trend lines are very important. And one thing that I mentioned very few times, or actually many, many times, I think, is that when prices get close to these trend lines, they usually get across. Now, I have been saying this for a few weeks. I was clear in saying I don't think it's close enough. What I mean by close is this. So let me just unpack that in case it's not clear. When Bitcoin is this close to these valid, so-called valid trend lines, prices go across, I would say 99% of the time. In fact, I do not recall prices getting this close to a trend line without crossing above at some point. What I really mean by this, what I want to drive home is maybe we don't cross right away, but the fact that we're just kissing this line today on August 6th, we're so close to the line. We're actually, I think Bitcoin tested it overnight. That, in my opinion, puts it at there's a 99% probability we cross above. So this is as close as crossing over as I have seen. In fact, some people have asked me in my model, why don't I move those lines? Why don't I make them more clear? Why do I sometimes declare things before the lines are already crossed? And my answer to that is what I just told you. Usually, if Bitcoin touches a line, it crosses above. And these lines in my model, they do not act as supportive resistance, do not support or resistance, do not expect prices to bounce off the line like this and head lower, because that's not what these are. These are levels that measure the vector of the move, so or rather the magnitude of the move in terms of price and time. So they're measuring, these lines are measuring how much Bitcoin, how much work Bitcoin needs to do in terms of price and time in order to cross the line. That's all they're measuring. It's like a measuring stick. They're not technical indicators in the classic sense of the word. These lines are only here because they draw a clear line between a rally that is strong enough to confirm a 4-year cycle low and a rally that is unfortunately not strong enough to confirm a 4-year cycle low. This is literally the line in the sand, this green downtrend line. That's why I bring it up every single week, because it is all important. It's also the most important discussion to have in crypto right now. Have we made a 4-year cycle low or not? Well, I have a clear answer. If prices cross the line, yes. If prices do not cross the line, no. Why does that matter to you? Well, I've said many times over the past few months, we are about to enter a multi-month correction in crypto markets. We haven't started it yet, which is a good thing. But we're about to enter that multi-month correction. Anyways, my forecasting model and Japanese and do both align on this. And whether or not we confirm the 4-year cycle low is critical, because if Bitcoin, I was just talking to a buddy of mine about this, if Bitcoin actually rallies above 65K, that's all we need as of right now. And keep in mind, the line declines every day. So the barrier, the threshold Bitcoin needs to cross in terms of price gets easier and easier by the day. Every single day, this line drops a few points and it gets easier and easier for Bitcoin to cross above. So far, it hasn't. But why is this important? Because if we cross above this line, then prices will do something like this. I'm going to draw it for you. Let's say they go back to 66. And by the way, since we're kind of late in establishing this stop, do not be surprised if Bitcoin just goes back to 67 and that caps the rally. I would not be surprised to see that, in fact. Not at all. If Bitcoin rallies above, let's say it goes to 66 by August, I think my model's date was August 7th, so that will be tomorrow, as of the recording of this video. If we cross this line, what that means is that as we head into October, Bitcoin will embark on this very slow sell-off, very low volatility sell-off as it heads to a low in October. Whereas if we doesn't cross this line, Bitcoin if prices do not cross this line, this is as high as they go, because literally this today has to be the high in order for this line to not be crossed. If the line is not crossed, Bitcoin is going to go much lower as it heads. Oh, sorry, not doing a good job with this. As it heads into October, much lower could be mean 50K, could mean maybe mean 45K. That's what it means. And so it's critical that to confirm whether or not Bitcoin is going to cross this threshold, because if it does, if it crosses the line, 60K is as low as it's going to go in October, regardless of whether or not there is a sell-off or not, which there will be. If Bitcoin does not cross the threshold, then it can go to at least 50K, I would say.